So you're concerned about home loan interest rates going up, but do you need to? Let's have a look at two things you can do right now to avoid getting into financial trouble. So the first thing we'll look at is interest rates going up. What does that mean to you? Here is a chart that breaks it down and looks at how much more your repayments will increase per week if your rate goes up by 1%. As an example, for a home loan of $500,000, the rate going up 1% would mean an increase in repayments of about $60 a week. So then the question is, can you afford to pay the extra $60 a week? Well, the best way to find out is to increase your repayment manually. Starting today, pay the extra $60 a week in your mortgage, and then you'll know if it hurts or not. If you get used to pay the extra $60 and life doesn't really change, then you don't need to freak out. You can afford the extra 1%. And the best part about doing that is that you're starting to create some forced savings and paying off your mortgage faster. So how good is that? Now, the second thing, which is quite ironic, is that a lot of borrowers, maybe like you, are already paying too much on their mortgage. Only in the last week of doing mortgage reviews, we found that 5 homeowners were paying between 0.75 and 1.2% too much on their mortgage. So for them, we've organized a refinance and reduced their rate to the point where if rates go up by 1%, they'll be back to where they started. So they don't actually need to be able to afford the extra 1%. They just need to be able to afford what they're paying now. And so this is probably the biggest tip for today. Review your existing mortgage. Call your bank and get them to drop the rate. And if they don't want to, then give us a call and we'll find a better home for your mortgage.